Hi everybody, it's Peter Schiff. It is Friday, September 10th, 2010, the end of a holiday-shortened, relatively quiet week. We had the Labor Day holiday on Monday. Many people had a holiday yesterday, myself included. It was Rosh Hashanah, Jewish New Year's, for those of you who don't know. So the week was short. It seemed quiet in the equity markets. The currency markets, again, the dollar index was relatively quiet, although within the week, currencies like the Australian dollar and the Japanese yen each made new 52-week highs against the dollar. Also silver made a new 52-week high this week against the dollar. The bond market was notably weak. I think the yields got as low. I think 2 weeks ago, the yield on the 30-year was under 3.5%. We closed today just under 3.9%, and we're right at a critical trend line. So if this trend holds, we would expect to see bond prices rising next week and yields falling. If they don't, if yields rise, that could be significant because we will be breaking a rather significant trend, and it could mean that we could see much higher interest rates in the near term if this downward trend for yields and upward trend in bond prices were to break. Of course, I am in the camp that the bond market is in a bubble, and sooner or later it will find a pin. I think in the scheme of things, it will find that pin much sooner rather than later. But what I wanted to take some time today and discuss with the remainder of this video blog is President Obama's news conference that he had today, and I think that followed up on a speech he gave yesterday. The main focus is his willingness now to make the Bush tax cuts permanent for everybody who earns less than $250,000 a year. For the people who earn more than $250,000 a year, the president is content to allow taxes to increase on these individuals. But what's really disconcerting is the reason that President Obama feels that it's okay to raise taxes on what he calls the rich. And the reason is that the people who don't make $250,000 a year, well, they're very likely to spend everything that they earn. And therefore, tax cuts on the middle class help the economy because they spend more. But if we increase taxes on the wealthy, that's not going to hurt the economy because, after all, the wealthy don't spend all their money. So the money they send to Washington in taxes, well, that's simply the money that they would have saved or invested. And if we reduce savings or investment, that's not going to hurt the economy. Of course, the president has it completely backwards. What we do need in this country desperately is more savings and more investment. That is precisely what's going to help the economy. More spending is not what we need. Sure, it's good if individuals have more money to spend. It's good for those individuals, but it's not good for the economy. It's not going to create the jobs that the president claims that he wants to create. It's interesting that when the president talked about what the rich people are going to do with their money, he specifically said, well, it doesn't do any good if we give a tax cut to the wealthy and then they take that extra money and they go invest it in Sweden. Now, I mean, most people aren't investing in Sweden. Most people who get a tax cut, or most of these people who pay taxes at the upper rate, they're mostly small business owners in the United States, and they're mainly investing in their own businesses, in growing their businesses and becoming more productive and hiring more workers. And when you raise their taxes, you directly diminish their ability to do that. But more important than that, when you raise the marginal rate of tax, you diminish incentives to continue to work. The more of your extra income you have to give to the government, the less likely you are to pursue that income in the first place. So incentives play a large part in growing an economy, in providing economic growth and job creation. The president still hasn't figured that out. But of course, instead of criticizing those Americans who do invest in Sweden, why doesn't the president try to figure out why they're doing that? I am one of the Americans who is investing money abroad. And the reason I'm doing that is because taxes are lower abroad than they are here. And more importantly, regulations are a lot less burdensome. So when I invest money abroad, it's a lot easier for me to generate a profit. Sweden has a corporate income tax of about, I think, 26%. Now, it's no tax haven, but compared to the United States it is. We're taxing at 35%. Plus, that's just the federal government. When you add the state income tax, most corporations are facing a marginal tax rate of 40%. That's significantly higher than it is in Sweden and much higher than it is in many other countries around the world where Americans can invest their money. So what the president should be doing is not criticizing people for investing abroad, but trying to figure out why they're doing that. Try to reverse the policies that are causing Americans to seek opportunities abroad. See, the problem is, why aren't the best opportunities available here in America? Because at one time they were. What Obama should be doing, if he really wants more jobs and more economic growth, is trying to repeal all the regulations that unnecessarily increase the cost of doing business in America so that people won't want to invest in Sweden, and lowering the taxes to make investments in America more profitable. But of course, in order to lower our taxes, we have to lower the cost of government. Because if we're going to collect less taxes, we need a smaller government, because the taxes have to fund what the government spends. So we need to cut government spending. But the president isn't doing any of that. He's increasing government spending. He's increasing the burden that the government places on the U.S. economy. Therefore, he's diminishing the ability of our economy to grow and to create jobs. And of course, it's interesting, when he's criticizing investors for investing abroad, he doesn't criticize Americans for spending abroad. Because remember, when we get a tax cut and more people go out and spend, what are they buying? They're buying things that were made in other countries. We're running up the trade deficit. We need to be buying things that we make ourselves. The problem is we're not making those things precisely because President Obama's proposals or his policies are keeping costs high. Taxes and regulations make it more difficult for American companies to manufacture profitably and competitively in this country. So in order to do so, they're forced to make their investments abroad. I mean, look at all the outsourcing. Why are businesses outsourcing these jobs abroad? They're doing it to avoid regulations. They're doing it to avoid taxes. Well, how about if we get rid of those regulations and taxes so there is nothing to avoid? You know, all what the president is going to accomplish by cutting taxes on the people who earn less than $250,000. And sure, I'm all for tax cuts. Believe me, I want Americans to spend their hard-earned money. I don't want them sending it to Washington and have bureaucrats spending their hard-earned money. But the problem is the spending itself does not create economic growth. It's the economic growth that allows the spending in the first place. But of course, if the government doesn't diminish its own spending to make room for the additional consumer spending, if the government keeps on spending, the result is a huge deficit. And those deficits are actually more destructive to economic growth than the taxes, because the money that the government is borrowing comes directly out of capital formation. It comes directly out of investments and out of savings. The exact activity that unfortunately President Obama doesn't regard as being necessary to economic growth. The only thing that he thinks creates growth is spending. But he's got that wrong. How anybody can look at the U.S. economy and say, I've figured out what the problem is. Consumers aren't spending enough. We're spending everything. The problem is we're not saving enough. We're not investing enough. We're not producing enough. And that is the precise activity that higher taxes that are scheduled to kick in are going to deter. Right? So what we need to do is dramatically reduce the size of government. That's not going to happen. We are going to run up the deficit in order to pay for these tax cuts. That's going to mean less investment. It's going to mean more inflation because the government's going to have to print up the difference. It's going to print up the revenue it's no longer collecting in taxes. And because it continues to destroy businesses and job creation, the number of Americans who are unemployed is going to continue to grow, which means more and more people are going to be collecting government benefits, and fewer people are going to be paying the income taxes or the payroll taxes. And of course, you know, there was some discussion, which seems to have been lost more recently, about a reduction in the payroll tax, which would be helpful, but not if it's temporary. We need a permanent reduction in payroll taxes, but then, of course, we have to address the broader problems of the entitlements, Social Security and Medicare, that those payroll taxes are now funding. But that's a discussion, unfortunately, that no one in Washington, including President Obama, is interested in having. Anyway, that's my 2 cents for today. We'll see what happens. This is an interesting political predicament that the Democrats and the Republicans are now in. And of course, the real economic future of the United States is hanging in the balance, and no one seems to care, because for our elected officials, it's all about politics. Anyway, take care, everybody.